Hello guys, so Mrs. Tole here from Your Tutors. So today we're going to look into income tax, but we want to understand how do we get to the income tax that we have here, okay? So let's understand first here what we call gross income. So this income before the deductions. So income before what we call deductions, okay? Income before deductions, okay? Now, from the income before deduction, for us to get the taxable income, we need to get rid of the pension fund and any donations which can be, in this case, can be charity. Okay, so we are saying your gross income, when we subtract the pension fund and donations, we now left with taxable income. What is that taxable income? We are saying this is where that you can pay, your tax is calculated from. So tax is calculated, what called tax is calculated, from this amount. Okay, so why do you pay tax? You pay tax to the government. Everyone is support. If you are working and the money that you are getting exceed what called the tax threshold, it means that you are going to pay tax to the government, and the government now will use that to provide the services and also pay your civil servants. Okay. Now, let's see what we have here. Now, from the taxable income, what we need to understand is that we need to look at the value, the amount that you're getting as a person that you're earning do you qualify to pay tax? And then we look at what called the tax threshold. What is the tax threshold? This is the minimum amount a person must earn to pay tax. So anything less than the tax threshold, if you don't pay tax. So for example, here, if you are, let's say you are in the age of 25, which is less than 65, and you earn 90,000, which is below 91,250, it means that you are don't qualify to pay tax in that case. Okay. Now, let's look at what called the tax bracket. I will explain this. This is our tax bracket. Okay. This actually, we are dealing with what called the annual income, but don't worry about that one. I'm going to explain it. Then when talking of medical tax credit, this only applies to those that are paying medical aid. Okay, that have got medical aid, and this money here is credited to the main member, And where does this apply? Medical tax credits. These are on a monthly basis. Okay, these are on a monthly basis, and what you need to do when you get this, you must multiply by 12. So in order for you to get the annual contribution, okay, that's what we need to understand. So medical tax credits are part of the rebates that we're talking about here. It's part of the rebate, the money which is the relief. So here, for example, here, when talking of when talking of rebate, this is the tax relief. So this money here is actually taken out of your taxable income. Okay, so it's a relief. You are actually benefiting from this. So a rebate, you subtract from what you are going to pay as your income tax. So this one here is more like you are rewarded to what call this amount back, from your total tax that you get. And here is what we have here. When talking of rebates, we have got primary rebate, we have secondary rebate, we have tertiary rebate. So who qualifies for primary rebate is people that are below the age of 65. What about if you're 65 and above 65 but below 75? You qualify for primary plus your secondary. What about if you are over 75? You qualify for primary, you qualify for secondary, you qualify also for tertiary rebate. Okay, that's what you must understand. So when you're subtracting this in your calculations, you must make sure that if you check the age and it's above 75, you know that you're subtracting 3 of them. But only for this one, the first one is only the primary rebate that you apply, which is what we have here, the figure that we have here, which are the rebates. Okay, now then from there now, you'll be left with what called income tax that you contribute to the government. But now let's look at questions that you must have here. What is that you need to note from the question? Check number 1. On your statements, check the age. Age of the person who is working. What age is that? The age is going to tell you what kind of rebate is that person going to receive. If it's below 65, you know that that person is going to earn primary rebate only. But if that person is above 65, is going to get primary and secondary, and it's above 75, is going to get primary, secondary, and tertiary. So it's very good that you note this age because it's going to help you. And then another thing, again, you must check with the income. Is it a monthly income that is indicated, or is it a yearly income? Now, what do you need to use? You only need to use the yearly income. So what do you need? Why are we saying that? We are saying that because you need to check on the statement. For example, if you had to read this statement here, Ms. Shego, 58 years old, which means that it qualifies only for primary, okay, and earns a gross salary of 46,523.16 per month. So if it's per month, you know that you need to multiply this by 12 to get what called annual income. But in this case here, let's read the question, continue the question. She contributes 7.5% of her gross salary towards pension fund, okay? And also pays an amount of 1,600 per month to the charity, okay? So what does this mean? It means that before you do any calculations, for you to get the taxable income that we have here, you need to subtract the 7.5, you need to subtract the charity amount. So when you do that, it means that you are going to be left with what called the taxable income, which now you can use what called to calculate your questions. But anyway, we're going to do this question, so you mustn't stress about that. Let's look at this question here. Dean, which is in November 2020, Dean, 25-year-old male, earns a taxable income of 305,174.44 cents. He started his job in March 2019. But here is something, this is kind of vague. It's not clear whether it's monthly or it's yearly. So it means that in this case here, you can either use this as your yearly or you can multiply by 12, because it's not stated actually to say, is it a monthly income or is it a yearly income? That's what we have here. So in this case here, you can multiply this by 12 or you can use it as a yearly as it is. Okay, so this is kind of a question that is a bit tricky in this case. So in this case here, you'll be accepted. The answer for yearly will be accepted, and also for multiplying by 12 will be accepted. Okay, so changing this value or not changing this value will actually help, will actually get to the answer. Now let's look at the second question here, which is in November 2022. Mr. Law, age 53. Now, age 53, it qualifies only for primary because it's below 65. And also, Dean also qualifies for primary also. And an annual income, look here, annual taxable income of 495,602 for the year ending 28 February 2022. He does not contribute to any medical aid. It means that you mustn't look at any medical, what call medical credits there. So in this case here, you're going to use this value, and when you look at this, use this value, you go straight to the tax bracket. So on the tax bracket, you must use what to call annual taxable income. So you only use annual taxable income. That's what you must use. So you mustn't use monthly here. You use annual taxable income to determine the bracket that the person fall into. Let's look at the last question here. David is a 68 years old. So 68-year-old, it means that this person qualifies for primary plus secondary, because this person is above 65. So that's what you must understand. So if you have to subtract here on your taxable income, your annual taxable income, you must know that you're subtracting 16,000, you're also subtracting the 9,000. Then here, David average monthly taxable income is 8,978. So what does this mean? It means that you need to multiply this by 12 before you go on further. Okay, that's what it means here. So it means that you must multiply this by 12 to get the annual taxable income like what we have on the top there. So in this case here, you need to multiply by 12 for you to get annual taxable income. Then from there, that's when you can go and determine which bracket does that person fall into. But anyway, now everything is explained here that you need to know the number of the years, the age of the person. You need to know whether the amount they pay, the salary, was it monthly or was it yearly. Then you must also check if there are any contributions like the pension and also charity, so that you can deduct before you look for the taxable income, okay, or tax bracket. Before you look for the tax bracket, you must make sure that you check that. Then another thing also, on the medical tax credits, you must check the family. So you must check the dependents. How many people depend on that person? So in this case here, you are looking at a family to say how many family members. So you are looking at family members here that are actually what you call that actually are part of the family of what call paid that are included in the medical aid. So in that case there, you must make sure that when you're adding everything on the medical credits, you get everything included, and again you multiply it by 12 to get the annual contribution. Now, let's look at the next question, the question that we actually have today. Now, we actually read the question here. So we are now looking at the question, first question. Write out the full name of organization that that is responsible for collecting tax in South Africa. So this is SARS. So here is South African Revenue Services. So in this case here, this is what called SARS. So SARS is the one that gives out this tax, rate of tax or tax table that we have here. Now, explain what the tax threshold refers to. We have answered this in the previous slide. We said it's the minimum amount a person must earn to pay tax. So if you earn anything less than that amount, you don't pay tax. So that's what we mean by tax threshold. Now, calculate Ms. Shego's annual taxable income. So annual taxable income, what do we know? Remember what we spoke about from the previous slide. We must subtract the pension fund and also the charity for us to get the annual taxable income. So for us in this case, we're going to get the pension fund here. Pension fund. Now the pension fund, how do we get pension fund? We're saying it's 7.5% of the gross salary, which is our 46,523.16, which is 16 cents. Now, what do we get here? Let's see what we get there. So this is what we get here. We get 3,489.24 cents. That's what we have here. So we have rounded off here to 2 decimal places. Now, another thing here, we're going now to look at the taxable income. Taxable income. Remember, here we're looking at a monthly income. So we haven't got to the annual taxable income. I'll show you now. So here, taxable income here, we're going to get our gross salary, which is 46,523.16, minus pension fund, which we got 3,489.24, minus the charity, which is 1,600. Okay, so your charity here, you have your charity here, and also you have the 7.5% there. Now, what do we get from there? Let's see what we get. Okay, so here we get 41,433.92 cents. So in this case here, this is our taxable income, and this is like monthly. This is monthly, guys, because we haven't got we haven't multiplied with 12. So in this case here, when you're looking for annual now, taxable income, we just have to multiply this by 12. So 41,433.92 times 12. So let's see what we get there if you multiply by 12. So we say times 12, then we get 497,204.04. 497,000 7.04. rent. Okay, so this is our annual taxable income in this case. Okay, so you must always remember that you have to get rid of the pension fund and also the charity if they are stated in the question. But if they are not stated like the previous question that I've showed you, like in this case here, there is no there's no pension fund, there is no there's no charity, so it means that you don't need to worry about that subtraction of that. So you just need to multiply by 12, then you get your annual taxable income. And if it's not a monthly taxable income, it's just annual, you just use it straight like that. You don't need to do any calculations. Now, let's look at the last question here. Now, Ms. Shego's friend earns an annual taxable income of 502,185, 60 cents. She claims that she pays more than 1/4 of her annual taxable income towards tax each year. Verify showing all calculations whether this statement is valid or not. Now, what do we need to do now? We need, remember, she claimed that she pays more than 1/4 of her annual taxable income, towards tax each year. So what do we need to get here? We need to get the annual taxable income. We need to get annual taxable income. So in this case here, we have annual tax. We need to get the annual tax. We need to get annual tax. That's what we need to get here. And then we see if it's above 1/4. Now, let's look what we have here. We look at this, it's annual taxable income. That's what we're given. So what do we do from here? We just go straight to the tax bracket and look where this value falls under. So in this case here, we can see that this is our bracket 1, bracket 2, bracket 3, bracket 4, bracket 5, bracket 6, bracket 7. So sometimes they can ask you how many tax brackets do we have? Then you must know that these are 7 tax brackets. And now in this case, when I see where does this value 502,185,60 cents fall under? So it falls under bracket number 4. So here it's in bracket number 4. And now, how do you get the rate of tax? Now we need to get the rate of tax. Rate of tax, we use what we have. The formula that we are given here in that bracket 4 is 115,762 plus 36%, which is 36 over 100. In bracket, we now subtract taxable income above 488,700. So we're going to say the amount that is given here, which is 502,000, is annual income minus 488 over 100. So in this case here, that's what let's see what we can get there. Now, I think you can see that I have done this behind the scene without you seeing, guys, the calculations here. But what you need to do here, first of all, just to make our video short, what you need to do, you subtract what we have in the bracket here. Make sure that you do step by step. You don't punch everything in the calculator. You must show each step because remember, it's 7 marks here. So you must show every step. Then in this case here, you now get what you have in the bracket here. Then from there, you indicate that. Then you get the percentage that we're talking about, which is the 36%, which is 4,854,82. But also, if you punch in your calculator, you're going to get something different. You're going to get 818. And in that case, now you need to round off. And if you round off 2 decimal places, you're going to get 82. Then from there, you add to your 115, then you get 120. Now that we are here, what do we need to do now? We get the annual, which is the rate of tax in this case, rate of tax. And now what do we need to do? We need to get the annual taxable annual tax. So let's look at annual tax here. Annual tax. How do we get the annual tax? We say the rate of tax minus the rebate. Remember, we said we talk about this rebate as our relief. The relief, okay? So the relief given to our taxpayers. So in this case here, rate of tax, we have the rate of tax, which is 120 16,82 minus the rebate. This person is 858, and if it's 858, in this case, it's Mr. Shego's friend, and here we're going to assume that Ms. Shego's friend is below 65. So in this case also, we are not given the age of Ms. Shego's friend. So we're going to assume that she is, below 65. So we're going to apply only the primary rebate in this case. So we're going to have 16,425. Then what do we get from there? Let's see what we get from there. So if we say minus 16,425, this is what we get. We get 104,191. 104,191, comma, let's see, comma 82. So this is the annual tax. But what is she saying? She's claiming that the annual tax is more than 1/4 of her annual taxable income. So it means that we are saying we're going to calculate 1/4 of the annual taxable income. So we're going to say 1/4 times the 502,185,60 and compare to our annual tax. So in this case here, let's see what we get. 1/4 times 502,185,60. So here, what we get 125,546,4, 125,546,4, and this is the 1/4. Now, what can we say about this statement? The statement, you can see, is invalid because it's below the 1/4. 104 is below 125. So this is an invalid statement. So you're going to also indicate that is invalid. So most of you guys, you forget to conclude that the statement is invalid. You just do the calculations correctly, but you don't actually conclude to say the statement is invalid because we are saying the 125 here is above the annual tax. In this case, she said she pays more than 1/4, which is a lie. So here we have to say it's invalid. Okay, so I hope you guys have grasped and you understand what you need to master on this part, on this chapter of income tax. And once you master this thing that I've told you, you won't have a problem when it comes to exam questions because they will just play around those areas. Knowing the age first, knowing whether the income is monthly or is that is given, is it monthly or yearly, is going to help you whether you need to multiply by 12 if it's monthly or just leave it like that and go straight to the tax bracket and calculate your rate of tax. Okay, so guys, I wish you the best on your exams. Until next time, thank you so much.